We got it.
Hayden's got it ready to go.
Okay.
All right, we'll go ahead and get started. Thank you to everybody joining us today to get a great update from the Federal Reserve. You know, it's super important that we try to stay on top of these trend lines nationally and locally. And I'm going to flip it to Mr. Matt Parker, the president of the Chamber, to introduce our special guest today. Matt.
Thank you very much, Dean, and really want to thank Jim Ellis for his work. He's been a great contact with the Federal Reserve out of the Birmingham office, the Atlanta Federal Reserve, and we've got a great opportunity to get to know Anup Mishra, who is the vice president for the Atlanta Federal Reserve out of Birmingham, Alabama, and always great information and dialogue with Anup, giving us an update on all the latest and greatest going in the national economy and touching on the state of Alabama as well. And appreciate your time, Anup, to do this for our members. We are recording it, so we will get that out to our members as well. But appreciate your time and support to shed some light on what we're dealing with right now. So I'll turn it over to you, Anup.
Great. Thanks, Matt. Also want to thank Dean, thank the Chamber, and special thanks to Jim. Jim has been great in really helping to create some connections with the broader Dothan business community. It's really more important for us, more important than ever, for us to be connected on a very grassroots level with the business community in the district that we serve. And the basic reasoning behind that is it's always important, but it's amazing at, data doesn't go nearly as far today as it did even a few months ago, because it is constantly changing. I can look at numbers that we saw from 2 weeks ago and really feel like we're in a completely different place now than we were then. So what's really been helpful for the Fed in terms of kind of understanding where we are and what we're doing is to be able to talk to businesses, to talk to community organizations at a fundamental level to see what are the impacts they're experiencing as well as how they're looking at recovery. And that's what I want to share with you today, and hopefully this is helpful. And I really wanted this to be an open dialogue to hear more of what you're seeing. So what I thought I might do is just take about 15 minutes, give you an overview of kind of what we're seeing at the Fed in terms of COVID, business impacts, and recovery prospects. And again, then really kind of open it up for questions and commentary in terms of what you're seeing. Just one note, anything I kind of tell you, I say it's the Fed, but really I only speak for myself. I don't speak for Chair Jay Powell or anybody, with the Federal Open Market Committee or the broader Fed. So these are just really my opinions that I'll be sharing here. One of the things that I did want to note is 3 months ago, I gave this presentation. I gave an economic outlook presentation, and it was up in North Alabama. And it's funny to kind of look back on my key bullet points, from then, which was labor is at, unemployment is at a historic all-time low, lowest unemployment in 50 plus years. The Fed probably doesn't have a lot of actions that they need to be taking this year because the economy is kind of running on course, consumer confidence is strong. We've come a long way in the last 3 months. But the other thing I would just really note, and this has been, I think, an important core part of the Fed perspective and how we viewed not only COVID impacts, but how we viewed the Fed response. What we're going through right now is a lot different from the financial crisis, from the perspective of this is really not an economic crisis. It's a public health crisis that has had economic impacts. And that's an important distinction. Typically when we think about an economic crisis, we think of a part of a business cycle in which things go really well, and then that sort of incentivizes excessive risk-taking. That risk-taking then translates into poor decisions being made, which then create economic difficulties, potentially leading to economic turmoil. That's not what happened here. We really had everything, the fundamentals in the economy were sound, and then we had a public health crisis. which then precipitated the economy, for all practical purposes, to shut down in many facets. Well, I mean, when consumers can't get out and when businesses have to shut things down, obviously it's going to have tremendous economic ripples. So the reason I mention this is because this has really informed the way that we are viewing our response to the crisis. So when we think of what the Fed did back in 08, 09 during the financial crisis, we tended to think in terms of stimulus. We had programs that were called quantitative easing, increasing the balance sheet, putting in programs in place that would try to stimulate different behaviors, having businesses invest more where they may have sort of shied away. Well, the Fed has taken a number of actions, but the actions really are not stimulus. They're not stimulus. They're not designed to stimulate the economy. What they've really been designed to do is simply to provide relief, essentially a bridge to make sure that markets don't freeze up. The transactions can still continue over this public health crisis until we get to the other side. So one of the things that's been different is obviously our balance sheet's grown, and there's been fiscal stimulus from the PPP side, and then the Fed has rolled out or has announced a Main Street lending program. But really what the Fed has done is looking at putting in programs in place that would help to keep the flow of credit going. What we want to do is we want to do enough to where treasury markets, muni bond markets don't completely freeze up, and that banks and financial institutions and others have enough of a comfort level to kind of keep things going. So in terms of thinking about our actions, what is it that we're really trying to, what is it that we're really seeing? Well, the labor markets have been hit incredibly hard. But one of the big differences that we've seen is that they've really been hit hard overnight relative to unemployment gradually increasing during the financial crisis. So you may have seen the labor reports that came out a little over a week ago. We're at 14.4% unemployment nationwide. Alabama has actually fared a little bit better than sort of nationwide, but it's not that we haven't been hard hit. I mean, even our initial unemployment claims have been pretty high. But a couple of the differences is that we didn't have as much, and we don't have as much exposure to travel and tourism, which really shut down overnight. So if you look at some of our markets in Florida or other places, they were really shut down in terms of labor markets overnight. Alabama has greater exposure to auto manufacturing, obviously. And so we're seeing obviously some auto trying to get back up and going, and those did get shut down, but a lot of the workers were furloughed, and that's been not as great of an impact as we've seen in other markets. The other thing that we've seen is that labor markets have been really difficult to understand exactly where we are in terms of unemployment. The data has been challenging to work with, and I say 14% unemployment, but we actually think it's probably higher than that. And part of what's really difficult for us to be able to get our hands around is that a lot of the actions being taken may not be fully absorbed or baked into the data yet. So, there may be individuals that for the most part, they are on furlough, and it may be a temporary furlough that turns into a permanent furlough. But if, statistically, if the Bureau of Labor Stats calls up and says, hey, are you working? They may say, yes, I'm still employed because they're technically on furlough. So we don't even really feel like the data itself is fully capturing what's going on in the economy. And that's why I think it's important for us to really be able to talk to businesses to kind of understand what's going on, not just with the labor markets, but with broader P&Ls and with expectations for future demand. One other thing I would just mention is, as I go out and I talk to a lot of businesses throughout the state of Alabama, and as my counterparts talk to other businesses in Nashville and in Tennessee, Florida, Georgia, Louisiana, and Mississippi, and we really compare notes, a couple of things I think that we're seeing. One is the expectation for recovery has really evolved. 6 weeks ago, 7 weeks ago, there were a number of businesses that we talked to that really were looking at more of a V-shaped recovery. They were thinking that, hey, we've really kind of gone downhill, but we've shut everything down. And when we open the state back up, or when we open our locality back up, it should then have the reverse effect of making things better relatively sooner. We don't really hear that vantage point much anymore. And I mean, there are a couple of reasons, but first and foremost, I think there's a recognition that reopening is much more complex than people thought that it would be. Because it's not just sort of reopening things, it's reopening with a lot of constraints dealing with social distancing, it's phased reopenings. And so if you take a look at a restaurant, it's not as simple as saying that, hey, I was open, I was doing good business, I'm closed, I had to furlough my employees, not making anything, and then when I reopen, things will come back. Because just as a restaurant would sort of think about this, you have a couple of things going on. First of all, when a restaurant reopens, they're not reopening at 100% capacity. They may be reopening at 25 or 50%. But second of all, you have the demand issue. And that is, just because things reopen doesn't mean that people are ready to come back to the restaurant and to dine there and spend money. So for that reason, I think we're hearing a lot of our contacts say that the recovery process is not going to be as straightforward. It's going to be more complex than we had thought even several weeks ago. We've heard a lot of different scenarios in terms of what recovery might look like, and it's probably no different than what you've heard as well. I mean, you've heard some version of the alphabet soup. Is this a V-shaped, or is it W, or is it U? What might it look like? I am going to, just for a second, I'm going to try to put the screen up here, and if it doesn't work, then I'll put it back. Let's see here. I'm going to try to share my screen, see if this works. Are y'all able to see the screen okay? When I do this, Dean, is it stopping your recording at all? No. Okay. So if you can see this, and hopefully it's large enough to kind of make out just some sample recovery scenarios. The way that we're talking to businesses about this is we have the V-shaped, which is a very quick recovery. The U-shaped is probably what we're hearing a bit more, and that is the idea that we're eventually going to recover, and the recovery will be strong, but we don't think that the strong recovery is going to happen for a little while. And the U-shaped is typically tied in with this idea that we really need to see some progress, some substantive progress made on the public health front before we see a much stronger recovery. And that progress could be in the form of increasing scalable testing, but preferably increasing, finding some type of treatment for COVID, and then obviously sometime down the line, even potentially finding a vaccine. The other one that we hear more of is the Nike swoosh shaped recovery. And I think this is really kind of a homage to this idea that it's not going to be a quick recovery, but we don't necessarily, think that we're going to be sort of cratered for a long, long time. But it is this idea that things are not just going to come back immediately. It is going to be gradual. It may be a little bit slower than we like. So it may last, a year or two, as opposed to a few months before we really get back to where we need to be. The only other one that I'll kind of point out is this W-shaped recovery. And the W is, this is a fear, I think, that a number of businesses have. And that is, I think when we hear from businesses, they tend to say, hey, we'd love some more certainty around this. We could probably deal with a swoosh recovery. I mean, a lot of businesses can't, and I certainly don't want, mean to imply that as long as it's gradual, everything's fine, because it's not. But I think the fear with the W is that as we start to open back up, and if consumer confidence is fragile, but it's starting to pick back up, if we hit a point to where we have a second wave of infections, or the public health crisis revisits itself or revisits us, then that could have a really amplified effect of shutting things down again and then really extending out recovery. So I think the W is kind of the fear of what we want to avoid. The U is probably the most realistic that we tend to get a sense of in talking to businesses. And the gradual Nike shape is something that I think businesses said, hey, if there's sort of one scenario that we think may make the most sense, or that we think would work a little bit better, the swoosh probably gives us a bit more predictability and stability. I say this with the other caveat that where you stand on recovery scenarios really depends on which sector you're in. Because look, if you're in a hotel, you're not thinking about a Nike, you're not thinking about the swoosh, or you're not thinking, you're looking at a much longer period of recovery. So, if you're a medical provider and you've recently seen and you do elective surgeries, you may be thinking that, hey, we have a backlog, but now that we're open, as long as we socially distance, we do see prospects growing for a little bit of a quicker recovery. So again, I just want to clarify that there are a lot of variations in terms of what we see based on where people really are along in terms of sector, as well as in terms of how big their company is. So hopefully that gives you a little bit of perspective in terms of how we're thinking about some different recovery scenarios. So with that, I think the last thing I will mention, and then I'd really like to kind of hear from the broader group and any questions that you might have and some feedback. But one other thing I would tell you that we're thinking about at the Fed is what do longer-term business models look like as a result of COVID? What do we think is temporary, it's an adjustment to what we're doing right now, versus what do we think is, hey, you know what? We think that the business model in this industry may fundamentally change. Or it may change, again, it could change for the better. Just as a couple of examples, certainly in the commercial real estate, one of the things that I think people are contemplating is, as more people become comfortable with remote work status, do we think that the per employee square footage that employers may need for their offices is going to shrink, because they're going to rely more on hoteling a concept for their offices, fewer sort of private offices, more people working from home. So does that fundamentally change the way we think about commercial real estate needs or office real estate needs? How does this impact, does this accelerate the trend towards online e-commerce purchases, making even larger retail stores less important? I'll tell you, in the healthcare space, you think about telemedicine. Everyone I've talked to in the healthcare space says that, look, it's not that people are going to stop seeing their doctors, but we have progressed light years in the last 8 weeks in telehealth and telemedicine, and we think that that's fundamentally going to alter the way that we think about primary care services, and particularly for folks in rural areas that may not have immediate and easy access to healthcare. So that's one of the things that we're thinking about, is what are some of the long-term implications in terms of various sectors and business models. And again, I'd love to hear your thoughts. So with that having been said, I will certainly, and Matt, if you or Dean, any thoughts in terms of how you'd like to get some feedback. I'd love to hear your questions as well as feedback on some of those, key points that I had outlined.
Yeah, thank you, Anoop. What a great presentation and very simplistic and right to the point. So thank you for doing that. Matt, I'll kick us off with a question. Anoop, you talked about the U-shaped recovery being something that you're hearing from businesses a lot from. I guess the thing that jumped out to me is that the W-shaped recovery is a possibility, and that's something, unfortunately, that is out of businesses' control, isn't it?
I missed that last part. That the W is something that businesses don't control.
Well, yeah, because if that to me is the concerning factor, that the W could happen at no fault of the businesses.
Yes. So here's what I would tell you on that, Dean. First of all, I think that fundamentally, this crisis, one of the real difficulties in addressing it is the whole crisis is really beyond business control. I mean, if you think about it, this was a public health issue. And I think one of the real frustrations has been that if you could point to economic behaviors that companies were taking, and if this followed some type of business cycle, business folks they may not like it, but, look, I mean, 2 years ago, a year ago, I talked to a lot of businesses that said, hey, we feel like it's in the 8th inning. I mean, this expansion has gone on 11 years and we're kind of due for something happening. Companies can prepare for a downturn and they can prepare for sort of things. But I think you hit the nail on the head. A lot of the real frustration is that businesses feel like they just have zero control over where we go next week, much less next quarter or next year. And I think that second wave issue is something that we don't even know where COVID is going as a epidemiological issue. We're still learning about the virus itself. So there are a lot of things in terms of reinfection rates and things that we don't know. And that is a real concern is, what does that mean? And I think what businesses are having to try to think about is, how do we plan for this incredible level of uncertainty? Because if we knew that there was a second wave, how would that change our behaviors now? And then at what point do you plan for something that may or may not happen? How do you even assign a probability? I mean, one of the things that we hear is that there is just no historical model that people are turning to. And we talk to a lot of companies that have great business continuity plans, and they've thought through a lot of different scenarios. Haven't met a single one yet that said, oh yeah, this is exactly kind of our pandemic uncertainty plan that we've sort of come up with, and we know exactly how we're going to model this out. It's been a real frustration.
Yeah, we'll open it up to questions now, and I'll kind of run through the list of our economic developer friends. And Matt, I'll start with you first.
Yeah, just I guess from a market standpoint down in Southeast Alabama, there was some bright side through all this, as we did see a lot of our industrial producers continue to maintain their operation. A lot of those were in essential business sectors, food, distribution, transportation, of course, DOD down here. So on the industrial side, and we did a Big 10 city call once a week with our counterparts throughout the state. And it was interesting. Obviously, there was a very high concentration of automotive sectors in other parts of the state, and the disruption that they were seeing versus our particular area was a uniqueness for this situation. So that I guess if there's one thing to be learned with that, obviously diversity is very helpful in a pandemic, and that was positive from our standpoint. Again, from the other business sectors, obviously the accommodations, hospitality side, obviously we all saw the impact with that, tied in with travel and tourism. From that standpoint, Aaron McCray, our CVB director with Visit Dothan's on here too, and he can shed a little bit more light on that. But that's the one that's been the highest impact. Even though you do have steady industrial production in the area, you still have some risks because of work and all that. So there's still impact there, but not to the extent that you would have thought. based on some of the other areas I talked to. The issue that I got a lot of feedback on the industrial side of things was just the supply chain issues. Obviously some of those impacted areas that had a higher rate of COVID infection in other states were part of the supply chain for down here. So there were some concerns with getting available inventory in the coming weeks or months ahead of that. So that was something out there that was indicated as a concern. Obviously, some of the customers that our businesses from an industrial standpoint we're doing work with maybe reduced orders a little bit and impacted that, but the supply chain was big. And I think the one thing that we've heard a lot about in our market and just going forward too is just the global supply chain is going to change. I think we've learned through this crisis that when one domino falls, it impacts everybody, and everybody's been impacted with the global supply chain. In fact, case in point, just to get essential medical PPE into our market, we had to air freight a lot of that into the market to fill the gap from our international supply chain. And air freight costs are not cheap, as you well know. So that was something interesting. And I think that's something that as we move forward, I believe we're going to see a more domesticated food supply chain, domestically produced. So I think that's going to create some opportunities out there. And I think there's going to be a lot of movement to really see that take place. What's incredible is just the entrepreneurial talent we have in the market too, to adapt and manufacture some PPEs with some existing companies that have done a lot of good things to help that out as well. That's some of my observations on the market. Obviously through the last 10 weeks of this, since we had the stay-at-home orders, companies, when all this was lifted, I think they did a really good job trying to implement best practices to reopen their operation and instilling consumer confidence, because that was key. So a lot of good protocols were put in place to prepare for an opening, and give kudos to a lot of our small businesses that took that extra step to really do a lot of things in that regard. It's probably going to be something that's going to be the new normal. And so I think we'll probably see that move forward as we hopefully recover from this period and not hit a second wave. The other observation that's out there, and that really hasn't been talked a lot about, but even with great telemedicine and support and access to meet the needs of the market, there still is a lot of there's a pretty good amount of demographic that's kind of high risk anyway, and they probably put off basic things where they really needed more medical attention. So there's been discussion about we're worried about that build up creating a second wave, not related to COVID, but just, hey, got diabetes, I put off doing some things I need to do where I really need to get more medical attention, or I got respiratory issues and I put them off because I didn't want to be there. So but there's a little concern and discussion about that, which would also overload our medical support system that way too. So just a couple observations to share with you from the market from that standpoint.
Great. Thank you, Matt. I'm going to call on Mr. Rick Clifton in Covington County for any comments Rick might want to make. Rick?
I think he's muted.
Well, yeah, y'all certainly know I'm not hesitant to comment, but I think what we're finding over here is that opening up, like you were stating, is a lot different than we expected. People in the lower income bracket are not coming back to work. People are, and I've had some direct conversations with small business people, and what their problem is the people can make more at home, sitting at home, than they have been making in their job. So, why should I go back to work? And of course, the answer is, well, you can turn them in and then they get their unemployment canceled. And I know that's a factor that you can use, but still, if you give somebody that's working a daycare or working at a hospital, if you give them $1,200 a month, you're $1,200 stimulus, you're giving them more than a month's salary in some cases. So it's difficult to get the people back to work. It's not practical in a lot of cases for you to just turn them in and cut off their unemployment. And then they hear that there's going to be another stimulus. So why should I go to work? I'm going to get another stimulus. And so what they don't realize is that if you don't go back to work, when the stimulus stops, there's not going to be a place to work, because we're going to lose. We had one restaurant here that closed that was doing great, but it closed because he couldn't get anybody to work. So I think from the retail standpoint, we try to go out to eat, and it's awkward. I don't know, just because you open things up doesn't mean people are going to go. So I think that the main thing that we're seeing is that the stimulus is helping the people, but it's not helping us start back up businesses.
Rick, I think that's first of all, great observations on that. I would mention two things. So the upside of the stimulus has been, in the last few weeks, we've actually seen a pickup of some retail sales, of just general sales, as consumers have some money in their pocket. There's been some pent-up demand. So we've actually seen a pickup in spend on like home goods and again, just kind of other retail. So that's been good. This whole issue of unemployment and the claims that have been filed and the 600 a week above and beyond, you're absolutely right. Anecdotally, we are seeing that be an issue in some businesses, particularly when you have low wage workers, somebody that might make $8, $9, $10 an hour and they can make more. It's also amplified in low cost states and communities. So, this is not an issue that people in Michigan or New York are facing, because the wages, what they get, the $600 doesn't make as much of an impact. But if you're in Alabama, and then even within Alabama, if you're in a lower cost market, there's even sort of greater incentive to essentially not go back to work in the interim period. So yeah, I mean, we're kind of seeing that, and that is certainly a concern. I've heard more in the last 4 or 5 days of employers really trying to get out in front of this by, nobody wants to play the bad cop, but just sort of saying, hey, look, and I think even the departments of labor are really trying to go out and say, look, if your employer calls you back and you don't come back, that's effectively fraud. And they're hoping that maybe the messaging or the communication around this can kind of help create some disincentive. But yeah, that is certainly an issue that employers are having to deal with.
I want to share one story. I probably shouldn't, but they know me here pretty well, so I'll share the story. A friend of mine was at a essential business liquor store, and so a guy literally came in and said, "How much beer can I get for $1,200?" And the guy behind it was saying, "What?" He said, "How much beer can I get for $1,200?" So he sat there on his calculator and he said, "Well, what kind do you want?" He said, "Bud Light." So he sat there and calculated on his calculator. He said, "You can get how many ever cases of Bud Light for $1,200. The guy took his stimulus check, signed it on the back, gave it to the guy, and got $1,200 worth of Bud Light. That's true.
Yeah, that's not how they drew it up in DC.
I don't think that was intended for, but that was essential business.
All right. Thank you, Rick. Next up, Ms. Veronica Kroc, who's from Ozark Dale Economic Development Corporation. Go ahead, Veronica. Veronica, are you with us?
I am. I'm sorry. I'm going to have to jump off the call here in just a couple of minutes. I just sent you a text, but great call. I echo everything that that Matt said. As far as we're concerned, the restaurants are obviously happy to get reopened. We're still dealing with 50% capacity, so we've got some restaurants that are waiting just a little bit to reopen, to reassess and get everything in line. But really, honestly, I don't have anything else to add other than I appreciate you taking the time to sit here and give us an update.
Thank you, Veronica. Phil Clayton from
Thanks, Brian.
Eufaula, Barber County. Phil, you want to jump in?
Yeah, hey, thanks, Dean, and thank you for putting it together for us. From our perspective, one of the things we're seeing, and I'm not sure how this is going to affect us reopening, is that a lot of our small businesses are really uncertain about payback versus grant rules of the, and they've been very reluctant to engage in any of those sorts of stimulus packages. I think maybe Betsy Baker on the call Friday said it best when she answered Matt's question with, well, it depends on the bank. And with that, we're going to get, any number of different answers. But I see that as having a big impact on us here in the Eufaula, Barber County area, because people are not taking advantage of it.
All right. I believe that's all the economic developers we have on here. We have a couple other business folks that I wanted to call on. Anoop, Jason or Patricia Devane, one of y'all from Hot's Restaurant on here with us. Do y'all have any comments for the group?
We are on, and we appreciate first and foremost y'all doing this. Very informative. Going back a little bit, obviously as a restaurant owner, it has thrown us to a new dimension of how we do business. One thing that we've also seen with the unemployment, as Jim said, is that some of our employees are making more money unemployed than they are at the store. One issue that we've encountered outside of that is that the unemployment office is so backed up that we've got employees that have not seen unemployment. We have hired 2 of them back just for them to turn around and be granted larger unemployment because they're getting 4 or 5 weeks worth of unemployment on time. So again, they leave. So I understand that's not how this was supposed to be or how it was built to be set out, but that is one thing that us small business owners are having problems with, is that because now that we're getting ready to reopen, we've got people that have not had unemployment. They now get a large line share, 3 or 4 weeks at one time, plus the $600. And it's, kind of like I said, it's kind of like income tax time. It's, one of those times whenever we lose some of those, minimum wage plus $9 to $10 employees. So that's the biggest thing we've been facing. Obviously, restaurants have done a great job of being able to change and get into some of the differences that we've had to do. Being local like we are, we've been very blessed. I'm not going to say that we are hurting as much as some of our friends in the industry, but it is now. I wonder about being able to move forth with this, how the unemployment, and as Jim mentioned again, now we're going to get a new stimulus. Now that we're trying to reopen, it's going to be harder for us to find, keep, or regain, recall employees. I just don't know how that's going to work out for us. That's one of our biggest issues. Not to mention that the supplies, which were cut down because you have, 20% of the restaurants in the U.S. working. So all of these people that have had to cut back their supply. And now whenever you start having restaurants open back up, the supply is not there. So we're starting to see shortages now that we've reopened.
Jason, can you speak to consumer confidence and how that might have affected people coming back into your restaurant to eat? And what have you seen, I guess, in this 1 week period where you have been able to open your doors back up?
Well, for us, again, it goes back, I can only speak to us being very local. We don't have a lot of transient traffic, so we're not sitting on a main thoroughfare where we have a lot of beach traffic that we expect this time of year. The majority of our customers are local, so we haven't seen the drop off that some have. As far as the confidence, the people that we have, I think you're going to have those two different sides. One's going to be the side where they're really worried about, COVID-19 and probably not going to be more confident to get out. And those who have been still doing their takeout orders or still coming in and picking up are just going to get more comfortable with coming in and sitting down. So I don't see that there's going to be a lot of change in the confidence for us because it's kind of stayed the same even during this.
Okay, great. Next, I know our friend Mr. Brad Kimbrough from Wiregrass Electric is on here. Brad, you have any comments you wanted to make? Brad? I think Brad was trying to connect. And Jim Ellis, you want to close this out? I think you're the last business person on here. We'll try to connect with Brad if he can get on.
All right. Thanks. Yeah, I just wanted to
You need to unmute yourself, Jim. There you
Okay. Yeah. Can you hear me okay? All right. I just wanted to mention just something that Anoop and I had talked about a few days ago, and Matt alluded to this. I think we're really going to see a serious disruption of our supply chain. And I think long term, this is going to be good for our region and good for our economy. It's right now, we're desperate to get PPEs and all kind of supplies right now. But long term, if we bring that manufacturing back to our area and we start manufacturing the kind of products that we used to manufacture, this is going to be a great boom for our economy. And I think Anoop might just want to address that for a minute, because he had said he and I had a discussion about tariffs versus the the COVID-19 pandemic, and economically that this may help us more than the tariffs helped us. So anyway, I'll just close it out with that and see if Anoop wants to mention anything along those lines.
Thanks, Jim. Yeah, I'll mention a couple things. First of all, it's absolutely correct that the supply chain has really been all over the place in the last few weeks. And I think to Jason's point, even kind of mentioning, hey, as things reopen and there's a lag period where, you may have had suppliers that have kind of shut things down because there wasn't demand and they've let some of their workers go. And now that restaurants are reopening, where do you get some of the product from? So there are a lot of issues. On the broader point, I think that Jim was alluding to, and again, we're thinking about this longer term. I think, the key issue behind the tariffs and some of the trade policy that was implemented a couple of years ago was really this idea that we want to spur domestic manufacturing. We want to get that going. And I think, whoever you talk to, there's probably been some mixed results. That's not really happened, I think, to the degree that people have wanted. What is interesting is we have heard a number of businesses talk about this issue of, when you're thinking about supply chains, if we can weather through this period of time, if as more domestic manufacturers are having to step in and make some changes, redeploy some of their production lines to produce additional things, there may be a greater willingness to trade off a slightly higher cost with greater availability and more reliability in the supply chain. So over the longer period of time, if you wanted to say, hey, what might be a positive takeaway, that could certainly be one. The other thing that I would mention, and I think this is really interesting, one thing that we've found out is that typically our supply chain discussions have really been oriented towards just the global supply chain, and because China has been top of mind. So even as we think about people responding to trade with China, they've diversified their supply chains internationally. So one of the things that we have found here with COVID is there's a lot of reliance on local or US-based supply chains. And so one of the real impacts has been that if, let's say, you're a manufacturer in Georgia or in Alabama, and you have you rely on, let's say, fiberglass, or you rely on something from Pennsylvania. Well, Pennsylvania has been shut down, for a while. And even if you have demand here in Alabama for your product and you're ready to manufacture, if you have been very concentrated with one supplier and they happen to be in Michigan or they happen to be in Pennsylvania, your supply chain's been really disrupted. Whether it doesn't have to be from China, even up in PA, you've encountered disruption. So I think it's really caused businesses to reassess not necessarily just where their suppliers are, but how many suppliers they have, and whether they should look at diversifying even geographically, or having 3 or 4 suppliers where they may have just had 1 or 2, because again, there are a lot of folks that people don't just think that in the next few months or next couple of months we're going to be done with COVID. This may be a longer term issue, and so I think diversifying the supply chain even domestically has been something that's on people's minds.
It's a great point. Anoop, thank you so much. Matt, I don't know if you want to close this out with any final comments.
No, just Anoop, we appreciate your time, and Jim, thank you for your partnership to help us get this going. And this information has been very good, and kind of get the grassroots on the ground type view from our perspective. And we appreciate you taking time out of your schedule to do that. And we will have this recorded for our chamber membership to hear this dialogue as well for those that couldn't make it. Again, appreciate your time. Just some commentary. I think that what has been done on all fronts at the national level, Federal Reserve, the Congress, I don't know that we could have done anything differently and been more responsive than what was established. So that's a credit to the leadership to try to get the things in there and utilize existing systems to deliver resources. The PPP tied in with our community and local banking institutions here. I mean, that was key, because it was about getting the money in the hands, and that was a really good program that really has helped out, and it's been very responsive from that standpoint. So we're very blessed with seeing that take place. As they evaluate the next package, we'll see what comes into that. But that was a huge mechanism for our economy, and just want to mention that and give kudos to all on the call and being involved in that to make that happen. So with that, Dean, I'll close it out. Again, thank you, Anoop, for anything. If you've got any final comments, Anoop, please share them with us, and thank you again for your time.
Sure. Well, just really quickly, I wanted to echo my thanks to all of you, not just for putting this on, but for your willingness to engage with the Atlanta Fed and what we do. In the chat function, I've put my email address. It's just anoop.mishra@atl.frb.org. Do not hesitate to reach out to me if you have a question, or if you have an anecdote or something that you're kind of hearing or seeing that you'd like to discuss further. I'm certainly glad to do that. I think the grassroots level is a really important part of how we make sure that we try to engage in monetary policy based on what we actually hear, not just on economic theory. And so your engagement is incredibly important to us. We really appreciate it. And if there's some way that I can help at all, not just for the greater Dothan area, but for folks that you may know in the state of Alabama, don't hesitate to reach out.
Great. Thank you again, Anoop. Appreciate everybody joining us. Stay safe.
Thanks.
Thank you.